The American dream has quietly turned into a financial trap. Across Florida right now, a slow-moving disaster is unfolding. One that will push millions of families out of their homes, not by choice, but because the numbers no longer work. This isn't about a normal housing cycle or a temporary downturn. It's about insurance companies methodically rendering entire parts of Florida unlivable for middle-class households, while wages remain stagnant and home values fall at the same time. Bloomberg analysis shows Florida homeowners are facing the most severe cost pressures since the 2008 financial crisis. The difference this time is stark. There is no clear recovery ahead. Insurance premiums have surged more than 200% in just 3 years. A public school teacher in the Tampa Bay area now pays more each year for property insurance than for her monthly mortgage. A Miami nurse spends 22% of her gross income on insurance alone before paying a single dollar toward her mortgage. A logistics worker in Lakeland watches his entire tax refund disappear into insurance premiums, leaving nothing for emergencies, like when the air conditioner inevitably breaks in Florida's brutal heat. Here is the harsh truth few are willing to discuss. Families who bought homes in 2020 and 2021, believing they were locked in long-term security, are now trapped. They're underwater on their mortgages, losing equity while housing costs swallow 40 to 45% of their gross income. These are not reckless buyers who overextended themselves. They are police officers, firefighters, nurses, teachers, the people who keep communities running, watching years or decades of savings vanish because insurers decided entire counties are too risky to cover at affordable rates. And 2026 is not just another calendar year. It is the breaking point. It's when emergency savings are exhausted, credit cards are maxed out, and families are forced into a brutal decision: face foreclosure or sell at a loss, often tens of thousands of dollars below what they paid, sacrificing their entire down payment just to escape. The Wall Street Journal reports that vulnerable Florida markets are flashing correction signals stronger than those seen before the 2008 crash. But this collapse isn't being driven by subprime lending. It's being driven by insurance premiums that doubled, then tripled, then quadrupled, even in areas that haven't been hit by major hurricanes. It's property taxes locked in at inflated peak valuations while real market prices fall. Its wages rising just 4% while housing costs jumped 65%. Today, we're counting down the 5 Florida cities where the financial math has already failed. Places where homeowners aren't asking if they'll be forced to sell, but how many months they have left. These aren't just obvious beachfront markets. They include inland cities, retirement destinations, and workforce hubs where families thought they were making safe, practical choices, only to learn that nowhere in Florida is truly safe anymore. Subscribe to our channel right now for weekly, data-driven market analysis that cuts through real estate hype and exposes the numbers mainstream media ignores. Ring the bell, because what's happening in Florida is spreading to Texas, California, and coastal markets across the country. Number 5. Port St. Lucie. Port St. Lucie branded itself as the affordable escape from South Florida's luxury housing. Situated on the Treasure Coast, this sprawling suburban city promised middle-class families relief from Miami prices while keeping access to the beach. Developers built thousands of single-family homes aimed at first-time buyers priced out of coastal metros. That affordability story has now collapsed. Median home prices fell from $372,000 to $338,000, a 9.1% correction that erased equity for pandemic-era buyers. Insurance premiums skyrocketed from $2,100 per year to $7,800, a crushing 270% increase. A young family that bought in tradition in 2021 using 3.5% FHA financing is now $42,000 underwater, paying $1,600 a month just for insurance and property taxes before even touching the mortgage. With a combined income of $68,000, both parents working full-time, housing now eats up 51% of their gross income, forcing them to rely on credit cards for everyday expenses. Teachers commuting to nearby counties spend 90 minutes a day in traffic while watching $54,000 salaries disappear into housing costs. Homes sit on the market for 108 days, with sellers cutting prices week after week. Number 4. Spring Hill. Spring Hill stretches across Hernando County north of Tampa Bay. Long a magnet for retirees and working families, it offered large lots, endless subdivisions, and the affordability Florida became famous for. Now, Spring Hill is experiencing one of the state's most severe housing collapses. Median home prices fell from $297,000 to $262,000, an 11.8% drop, among the worst in Florida. Insurance premiums surged from $1,800 to $6,800 annually, a 278% increase. Families earning the local median income of $57,000 face about $21,000 in yearly housing costs. Much of the housing stock dates back to the 1980s and 1990s, with aging roofs and outdated systems. Insurers are either refusing coverage or demanding extreme premiums for homes over 20 years old. A retired Ohio couple who paid $270,000 cash in 2020 now owns a home worth $235,000, while paying $7,400 a year for insurance alone. Their savings are draining by $18,000 annually. Working families face even worse math, with 50 to 70-minute commutes to Tampa and $450 a month in gas. Homes sit 131 days on the market, with sellers accepting offers $40,000 to $55,000 below asking. Number 3. Palm Bay. Palm Bay, at the southern end of Florida's Space Coast, exploded in population as aerospace workers and retirees searched for affordable living near Cape Canaveral. With more than 120,000 residents, it became known for large lots, newer homes, and prices well below coastal averages. That value proposition has evaporated. Median home prices dropped from $314,000 to $282,000, a 10.2% correction that wiped out recent buyers' equity. Insurance premiums jumped from $1,900 to $7,200, a staggering 279% increase, alongside annual property taxes averaging $5,400. Households earning Palm Bay's median income of $59,000 now face roughly $23,000 a year in housing costs. Engineers and technicians at Kennedy Space Center earn $65,000 to $80,000, solid incomes by Florida standards, but are discovering those wages can't keep up with housing costs that rose faster than anywhere else on the Space Coast. A family that bought in Bayside Lakes in 2022 with 10% down is now $53,000 underwater, paying $1,400 per month just for insurance and taxes. Even with a combined income of $130,000, once car payments, childcare, and basic living expenses are added, they're maxing out credit cards every month. Homes linger on the market for 119 days, the longest in Brevard County. Number 2. Daytona Beach. Known for spring break, NASCAR, and 23 miles of drivable beach, Daytona Beach hides a housing market collapse behind its tourist image. Working-class families and retirees are being pushed out. Median home prices fell from $342,000 to $304,000, an 11.1% correction. Insurance premiums exploded from $2,300 to $8,900 annually, a 287% increase. Families earning the median income of $53,000 now face $27,000 in annual housing costs, about 51% of gross income before food or transportation. Service workers earning $13 to $19 an hour top out around $38,000 a year. A restaurant manager making $46,000, who bought in 2019, now pays $7,800 a year in insurance and $1,600 per month in housing costs before the mortgage, on take-home pay of roughly $3,200. The math simply doesn't work. Retirees face similar pressure. A widow living on $2,800 a month in Social Security pays $1,050 for insurance and property taxes, and is draining savings by $1,400 monthly, giving herself just 11 months before a forced sale. Homes sit 114 days on the market, with sellers accepting $50,000 to $60,000 below asking. Number 1. Lehigh Acres. To see how Florida's insurance crisis is dismantling the middle-class dream, look at Lehigh Acres in Lee County. Once ground zero for affordable homeownership, it attracted young families and working-class buyers priced out of coastal areas. Lehigh Acres is now collapsing faster than almost anywhere in the state. Median prices fell from $318,000 to $279,000, a devastating 12.3% drop. Insurance premiums soared from $1,700 to $7,400 annually, a staggering 335% increase. Families earning the median income of $54,000 now face $23,000 in yearly housing costs, 43% of gross income in a community with limited infrastructure and long distances to basic services. Insurers view the area as high risk due to wildfire exposure, overgrown land, and limited fire coverage. Construction workers, landscapers, and retail employees who bought homes for $220,000 to $270,000 in 2020 and 2021 are now $50,000 to $65,000 underwater. A construction worker earning $58,000 who bought for $262,000 in 2021 is now $62,000 underwater, paying $1,400 a month just for insurance and taxes before the mortgage. He's maxed out 4 credit cards totaling $38,000 and estimates he has 5 months before foreclosure. Homes sit 142 days on the market, the longest in Lee County, as buyers avoid Lehigh Acres entirely due to crushing insurance costs. Florida's 2026 housing disaster isn't a forecast, it's happening now. From Port St. Lucie to Lehigh Acres, working families and retirees are being priced out of homes they bought, believing they were securing their futures. Insurance premiums have tripled while home values fall, destroying equity and affordability at the same time. Families who purchased between 2021 and 2022 are underwater and bleeding cash to cover insurance bills that exceed their mortgage payments. They are trapped between 2 impossible options: keep hemorrhaging money until foreclosure or sell now and lose everything. This isn't speculation. It's families counting down how many months they have left. With the right information, you can avoid these traps and identify opportunities created by desperate sellers. Subscribe to State Stories for weekly, data-driven insights that cut through the noise. Hit the bell as we expose Texas markets, where property taxes are creating the same disaster, and California regions where insurance costs are making coastal living impossible. Comment below what Florida city shocked you the most. We'll see you in the next breakdown. Because sometimes the smartest investment is knowing exactly where not to buy.